Greetings and happy Topo Chico to you. All right, folks, today, Jobs Day. Jobs Day is something that could lead the market to be very happy or very disappointed. I'll explain why, but I just spilled some Topo Chico. Oh, well. So here's the thing. Markets are going to be looking for not just a top-line number here. The top-line number is going to be it's going to be important. Don't get me wrong. We're going to want to know what the unemployment rate is. We're going to want to know, are we going to fall under 4%, which is entirely possible. It's not expected, but it's possible. And we're going to want to know how many jobs were created in the month of December. With this, obviously, we can then calculate the unemployment reading. We're expecting it to drop from, let's see here, 4.2% to 4.1%. We're expecting a change in non-farm payrolls of 450,000. That was actually revised up from 420,000. The reason that was revised up is because the ADP report came in with an expectation of 375,000 jobs, and it came in at more than a double, just over 800,000 on the ADP report. Now, the Federal Reserve has been the center of all financial news over the past few weeks. The reason for that is because the Federal Reserve has something known as a dual mandate. Number one is price stability, and number two is maximum employment. And as long as the Fed needs to accommodate employment, the Federal Reserve likes to keep interest rates low, especially if there is no inflation or if there's little inflation. However, if maximum employment has been achieved, and we don't necessarily need the Federal Reserve to help us accommodate to getting businesses to hire. That is, businesses don't need cheaper interest rates to hire individuals. They just need people to hire, which is kind of the environment that we're in. Then that leaves the Federal Reserve open to checking off the box on maximum employment and instead being able to focus on inflation, which, given that so far the employment situation has been such that, if anything, businesses are trying to hire too many people. If anything, we've been overheating with how many jobs we're trying to recreate so quickly, making it very challenging for the labor pool to actually fill all of the demand that we have, leading prices or wages, prices of labor, right? The cost of labor, wages to rise. Then it really signals that the Federal Reserve maybe doesn't need to accommodate hiring. What they need to actually focus on is inflation, and they could do so by raising interest rates and tightening monetary policy, using the big vacuum cleaner, taking money out of the system by selling bonds. Selling bonds leads yields to go up. Yields going up hurts a lot of stocks, specifically higher growth stocks, because the expectation is that the future value of our money is worth less. A lot of that is just driven straight by algorithms. So, what are we expecting today? Well, again, if we get a numerical beat of this, instead of 450,000 jobs, we get something in excess of, let's say, 800,000 jobs, kind of like the ADP report implies. That could potentially be a negative catalyst for the market, because markets might see that as, okay, we are getting a little hot here. No, we have been a little hot. Let's tighten a little faster, Fed. Come on, let's get with the program. However, last month we had a massive miss, which was really interesting. Last month we were expecting somewhere around 400,000 jobs as well, but we actually got 210,000 jobs. So we got a huge miss to the downside last month. But what's more important than that top line number, because the implication might be, if we get a miss to the downside, maybe then that'll be good for stocks, right? The flip side, though, and this is pretty dang important, is we have to flip over to look at what average hourly earnings are doing on a month-to-month basis. Year to year, is okay, but in my opinion, it's not exactly the measure the market's going to care that much about. See, on a year-to-year basis, we, in the prior report, had wages increase about 4.8%. So that means wages have gone up about 4.8%. You are making $100,000 in theory. You should be making $104,000 and $800. That's the theory. But anyway, so the last annual read or year-over-year read again was 4.8%. Think of it kind of like your that's really annoying. Your CPI for jobs. Now, the other thing that you have is the month-over-month read, and in my opinion, this is the more important one. The reason this is more important is because the month-over-month read gives us an idea of the speed at which we're traveling right now. Now, a lot of people get this very, very confused. But when you get a month-over-month number, in order to figure out what speed you're traveling at, what speed of sort of inflation you're traveling at, all you have to do is multiply it by 12. Sometimes people get confused and they try to be a little bit more fancy and like, well, you're supposed to compound that rate, so you'd have to use exponents. No. Just multiply it by 12 because we're not trying to figure out what we think the annual inflation rate is going to be in sum of the entire total as a compounded growth rate. We're trying to understand what the annualized rate is. What speed are we going at in a particular month? And the speed that we were going at in a particular month last month was 0.3, which means the speed of wage growth was about 3.6%. 0.3 times 12. This month, it is expected to be 4.8 on the annualized, which is 0.4 in the average hourly month-to-month earnings rate. And so we can figure that out by somewhere about halfway down the BLS report. We'll see the average hourly report. In fact, what we could do right now, employment, is we could actually pre-pull up the last one. So that way, if there are any kind of revisions, maybe it is slightly easier for us to see. But let's see here. We'll do a little bit of looking here. Anyway, so yeah, this news comes out in 7 minutes now. And this is kind of what it looks like. It honestly looks like a fax machine or something you're going to get from the DMV, which is kind of sad. But anyway, if we just search for the word hourly, there we go. See, take a look at this. This is what the report kind of looks like. This gives you just a little bit of prep work. See, in November, average hourly earnings increased 8 cents to 31.03. So 08, 31.03 is what is that about? Hold on here. Let's hold on. Let me make sure I'm doing this right. Oh, look, they're just doing the math here. Average hourly earnings have increased by 4. Well, that's the annual, but I'm trying to find out of all in November, average 8 cents to 31.08. Oh, right. Let me do it actually the other way. Hold on. Sorry. The way I used to do this is 31.03 minus 8 cents is 30.95. There we go. It's a little tricky, especially at 5 and no, I'm still getting the same thing. This is weird. Hold on a sec. Maybe I'm screwing up how to do this. It might just be too early for me to comprehend how to do this right now, but that's okay. This is where the average hourly earnings spot is. That is interesting. Did they change this? Yeah, because what we have is that this was at 3%, unless they're rounding. And it doesn't even make sense. I don't know. I don't know if this was revised or what. But anyway, so we'll see what the new report says, and we'll get a summary listed anyway. So okay, let's see. So 8 cents. Did I type it in wrong? Anyway, okay. So in the meantime, other things that we need to talk about are the following. A lot of folks believe that yields will increase substantially, potentially over well over 2% for things like the 10-year. And so what you want to look at are things that are quite interesting in the past, which in the past, when the Federal Reserve raised interest rates, Treasury yields didn't necessarily rise over the Fed funds rate. And I want to show you this chart here. Take a look at this. So this is sort of a screenshot of a computer screen, so it's a little dusty. But anyway, you can see the blue line here is actually treasury yields. And this sort of red, more jagged line here, this red jagged line, this represents your Fed funds rate. And so you can actually notice here in about 2003, 4, and 5, we had the Fed funds rate rise substantially above what treasury yields were. And despite this increase in the Fed funds rate, we didn't necessarily get treasury yields rise that much more. You had the same thing or a similar thing happen here in 2018 or 19, where you did have a run of yields, but it's not like they substantially exceeded in this case. This was maybe more of an abnormality here, because here it does look like the treasury yields kept pace with the Fed's funds rate. But this was interesting here, is that you had the Fed funds rate really exceed what treasury yields were. And so that's actually giving or creating some hope, some hopium that wait a minute. Yeah, exactly. Or Dave, yeah, we're doing the math right. It's weird that it's listed at that percentage. I'm a little confused. But anyway, the potential implication here is actually big, and it's that what if the Fed funds rate does go up, and it eventually goes up to 2.5%? Does it necessarily mean that treasury yields have to go to, let's say on the 10-year, have to go to 3% or something, which could be devastating for let's say tech stocks or something like that? No, not necessarily. So, and the early 2000s show us that, which is very interesting. So we'll see what happens. Okay, so let's see here. We have what else do we have? We have, so this is Goldman Sachs. We do have Bloomberg believing that 10-year treasury yields will go up to about 2%, 2.04% is their estimate. This is actually substantially more than where we sit right now. So if we take a look at futures and bonds right now, the Dow is actually all of the indices are relatively flat. This makes a lot of sense because the market is very much on standby right now for what's going to end up happening with the unemployment report here, or employment report, I should say. It doesn't matter. Same thing. So here you've got the U.S. 10-year about 1.75 right now, and this is about similar to the peak that we had in February to March. Now, February to March peaks for this treasury yield, which isn't loading right now, but anyway, 1.75 peaks for in that February-March period did lead stocks to come under some substantial pressure during this time frame. And so there's this concern that if these yields rise on whatever comes out of this bond report, that we could end up seeing some more pain in the market, especially amongst those higher growth stocks, amongst profitless tech companies, software companies, tech companies, you name it. Let's see here. By the way, there's a note here that tech stocks got a lift. Big companies, including Apple, Google, Microsoft, are advancing ahead of the bell. Chip stocks look set to extend Thursday's gains with news of the CES tech conference boosting Nvidia and some of the other chip manufacturers. Yeah, look, the more we talk about the metaverse, the more chips become important. I mean, think about rendering people in 3D. I mean, come on, folks. You want to play the metaverse? Chips or Matterport. I think that's the earliest iteration of the metaverse that we'll see. But anyway, okay. Still confused a little bit on why all of a sudden we had that the sort of potentially this revision here. Sometimes they revise the numbers. It's kind of after the fact. It gets a little confusing. But anyway, let's see what happens here. What are we going to get? What's the top line number going to be? Remember, the expectation is, oh, there it is. Wow, we only had 199,000 jobs. Unemployment rate 3.9%. Unemployment rate that beats expectations. 199. That is a huge miss. That we were expecting 450, folks, especially after that ADP report. That could actually help take some. Yep. S&P is moving up on this. That could help. I do not have the average hourly yet because everybody's on this freaking webpage and it ain't freaking loading. So let's just listen in here. Hold on.
By 34. Steve, what's the number?
199,000. Another big miss here.
I beat CNBC.
Just 249 from 210,000. Private sector jobs were 211, so it looks like we might have lost some government jobs there. Factory, 26,000. Goods producing overall 54,000, with construction at 22,000. Yeah, government was minus 12. Let's see, average hourly earnings for all private workers, a very strong 0.6%. Again, that's a sign of a tight job market, raising questions about this BLS number or the overall payroll number here. Let's see what else I can tell you. I don't have the unemployment rate. The U6 rate, the broader measure of labor slack, 7.3%, down from 7.7%. I have the Hispanic unemployment rate. I don't have the overall employment. Oh, yeah, wow. The unemployment rate dropping to 3.9% from 4.2%. That suggests, again, the household survey was stronger. I don't have that in front of me. I'll throw it back to you, Becky, and I'll look for some of those household numbers. Black unemployment rate declining to up to 7.1% from 6.5%. The white unemployment rate down to 3.2% from 3.7%. Again, I'm guessing, and I'll come back to you with this, there's a stronger household survey than the payroll survey.
Betsy, this is exactly what you said happened last time. I think.
All right, let's take a look through here. So raised 19 cents to 31.31 in the average hourly. I think this is a little higher than expected. Let me take a look here, though. Unemployment rate declined to 3.9%. We have. Let's see. Over the year, these measure. Okay, here we go. Among the major workers, unemployment rates for adult men at 3.6%, adult women 3.6%, whites 3.2%, blacks 7.1%, Asian 3.8%, Hispanics 4.9%, teenagers 10.9%. So really, black unemployment really lagging here substantially. I do want to take a quick look at the market reaction here. I think this SPY reaction coming right back down is a little bit of fear about that unemployment, that average hourly. If we're doing this right, and I'm just a little dumbfounded here, but I believe this actually came in at 0.06, because if you divide by this, you get 0.6%. And unfortunately, 0.6 in terms of a percent times 12 is a 7.2% annualized inflation read. That comes in substantially worse than expected. And we were expecting a 0.3. If you get a 0.3 or even a 0.4, I'm sorry, is what we were expecting. That's 4.8, right? So a 0.06 is an inflationary pressure, while it is still good news to some sense that we're not overheating with that top line number. That inflation read coming in a little bit worse than expected, I think, is exactly what this market was concerned about. So I believe what you saw here was a reaction of the market going, oh my gosh, this is good. We're not overheating. This is good, good, good. As soon as that number got calculated on that average hourly earnings, these candles turned to the red side. So not much, though. I don't know how much markets really, markets are kind of confused by this. It's almost like we're getting a little bit of like a 50-50 reaction here. I'm going to just try to look at some larger cap stocks here to understand how the market overall is reacting. The market just doesn't really care. Let me see here. Let me look at a small cap here. If any, but small caps kind of ran into the news. So or at least this particular one. Here's Robinhood, for example. Yeah, okay, a little bit of a U-turn to the downside. So okay, a little bit of a softening. Let's look at BTC. So this really doesn't give us much. BTC having a little bit of a run on the news. Coming right away when we had this miss, BTC actually did well. How weird is this? This is a very, very odd performance here by BTC, just because of how aligned BTC has been with tech stocks. So let's take a look at Amazon, perhaps. Amazon barely reacting to this. Very, very little of a reaction. if anything, skewed to the downside. And again, I think it's skewed to the downside because sure, we're not overheating on that top line number, but unfortunately that inflation number, once again, inflation haunting us, coming in a little higher than expected. Again, though, crypto does seem to be, a lot of cryptos do seem to be rotating positively on this, no matter the reason for it. Ethereum, BTC, Solana, all showing significant moves to the upside on what is a report that potentially implies, hey, Fed, maybe your job isn't 100% done yet accommodating because we're still struggling to get those jobs. Now, they did revise up October payrolls, which is really interesting, from 546,000 to 648,000. But even an additional 100,000 jobs, not that big of a deal. Yeah, okay. All of a sudden now, crypto rotating right back down. See, this is actually more expected as it should be aligning with tech. So, and tech, I think right now is not enjoying this as much as potentially hoped. So you're seeing a little bit of that rotation continue here on Tesla. You're seeing, look at that, a negative 6% here on Tesla, or on DWAC, sorry. Not honestly a surprise. I said that yesterday. I would not hold this thing overnight. And sure enough, now it's rotating down. Came a little bit later than I expected, but still expecting that. So, okay, let me continue just reading the report for a brief moment here. The number of unemployed for 27 weeks or more declined by 185,000. The measure is down from 4 million a year earlier, but is 887 higher than Feb 2020. So not much accommodation needed here anymore. Number of permanent job losers at 1.7 million in December declined by 202,000, still down 1.8 through the course of the pandemic. Labor force participation rate unchanged. This is something that the Federal Reserve is also excited about seeing increase. And so far, we haven't been seeing this increase. The marginally attached individuals to the labor force was unchanged at 1.6. The people not in the labor force who want a job is unchanged at 5.7 million. This figure is still 717,000 higher than where we were in Feb 2020, pre-pandemic. The share of people who teleworked was 11.1%, little different from November. This is interesting, despite all the Omicron, madness. Total non-farm payroll increased by 199,000. Leisure hospitality up 53K. Professional services 43K. A loss of jobs here in professional and business services. Look at this, 35,000 jobs cut or sliced in business and professional services. So I would imagine this is like white collar work. Okay. Again, the rate over here at an annualized rate of 7.2%. This is not ideal. I also figured out the math I was so confused about. I mentally have figured it out because I was so confused. I know what they did. I'm sorry it took me 20 minutes to figure that out, but I figured it out. So if we go to where's the darn thing? Here we go. Employment rate situation. Okay, so here's how we do it. See, this is the December one. Do they just update it to December? They get rid of the November one? Maybe that's what they do now. Oh, this doesn't move. This latest news box. Oh, I see. Okay, whatever. I could go to all releases over here. No, it doesn't matter. I could just tell you that the weird thing I was looking at when I did the numbers, it was something. I basically got a number that looked like this. Basically, what they did is they just rounded this up last time to 3. That's what they did. But it still looks weird because you're expecting to see a number that's kind of like, oh, this is 3%, right? But remember, folks, this is the monthly figure. So you have to times that by 12. And there you go. There's your 3.6%. Times by 12 times 100. And you can see it even more clearly, right? 3.6. So it's a little bit of weird rounding that they did. And that's why I was getting thrown off. But the math I was doing was right. I couldn't comprehend the result. I'll Yeah, I'll have some more Ben Mala coffee here. Shout out to Ben Mala in Florida. Good guy. All right. So again, this inflation read, in my opinion, not good for the market. DWAC now down about 8%. Etsy down about 0.5%. Let's take a look and see how things are shifting here. We did have Emran spiking here on news of an updated Amazon partnership, which is very exciting. I don't know all of the particulars here. It's not a stock that I really particularly follow, but that was one of the reasons. You did have GameStop substantially jumping on news of creating an NFT market space for video games, which a lot of folks were very excited about. IronNet up 5.4, Sonos up 4, Backed Holding is up about 4.95, Canadian Solar moving about 3% here. So we got some things moving to the upside. A lot of things still getting burned to the downside, specifically crypto related, like HUD-8 mining. It makes sense that HUD-8 mining is going down with Bitcoin. This is very common. Affirm moving down about 1.7%. Not much of a big move to the downside here. If we go ahead and just take a quick peek at Tesla, yeah, we do see that rotation in effect after that jobs report. You can see volume has increased after the jobs report came in. And again, it is weighing on the market with inflationary concerns. Yeah, look at this, folks. The S&P 500, very interesting. The first sign of excitement on, oh my gosh, it's a big miss. We beat CNBC to that one. That was cool. But a U-turn as soon as we realized that the inflationary numbers were still here to bury us. Shout out to Topo Chico. This is like the best sparkling water in the world. It's so good. All right. Hashtag not sponsored. But anyway, crypto did have a very lagged response. I don't know what it is with the crypto market, but a very, very lagged response. We initially saw euphoria begin. I guess I shouldn't call it euphoria. We saw some nominal level of excitement come to crypto on the miss, but it took a solid 5 minutes for crypto to get the memo. I would not be personally surprised, folks, if institutional traders love that kind of lag time. And if you think about it, that lag time is ridiculous. I mean, we're looking at it like this is the opposite of what should be happening. I mean, just rewind and you'll see me say that. And that's really interesting because it in my opinion, sends the signal that crypto's still the Wild West of trading. It is not as quick as the stock trading world is. Now, on this news, let's take a quick look at how the 10-year is reacting. Unsurprisingly, it is spiking up. So, before the jobs report came in, the 10-year was sitting at about 1.72, and we have now spiked to 1.756. So this spiking yield curve could also be now, or not yield curve, but the 10-year could be weighing on the tech sector, certainly. And we know that crypto no longer serves as an inflation hedge, folks. I hate to break the news, but we have now, I think, clearly documented in numerous different videos that crypto has much more of a correlation to technology stocks. And it's almost really just a placeholder for technology stocks. Not quite. There's still some diversification to tech, some, not much left. But it has lost its inflation hedge aspect by performing well in inflationary times. In fact, the best performance we've seen from crypto has actually been when we've had a lot of fiscal stimulus and monetary stimulus for that matter, but not a lot of inflation. That was the best time for crypto. And we are seeing yields somewhat rotate down now. We did have a spike on the 2-year to about 0.89. sitting at 0.88 right now. It does look like we've capped out on this 10-year or the Treasury reaction. Let me quickly just pull, and then we'll go back to the sticks here in just a moment. Let me just get the 10-year again. I want to see if we've reached a peak, because that could potentially mean we're going to see a little bit of a recovery again in tech stocks, but not necessarily. So let's see here. Okay, yeah, we've peaked on yields, and yields are rotating back down. A lot of folks get very confused why anybody in the world would actually buy bonds, because if you buy bonds, then you're really committing, it would seem, your money to either a trade that you're going to trade the bond, or a really low yield, like 1.75% on a 10-year bond. Like, who cares, right? Why would you want that coupon? And what's important to remember is sovereign buyers want our bonds, because compared to Europe or Japan or other markets, the risk-free yields are zero or negative. So the United States has a substantial advantage in risk-free debt, in that we actually have positive yielding debt, which does create some distortions, I would imagine, for the market. Because if we didn't have that, is it then possible that less people would buy our bonds and yields would be actually substantially higher, and the market would be even more tattered? Yeah, possibly. But anyway, yeah, something to keep in mind. That's why we get some pressures here. So looking again, as soon as Treasury yields started inflecting down, it does look like we started hitting a bottom here on BTC. So you tell, watching the Treasury market and watching the essentially the 10-year, the 2-year, and what's happening in the tech sector is almost critical for cryptocurrencies. Now, we're not at a low where we sat last night. Last night, we briefly, around 9 p.m., hit this 41,000 low. So far, we've been breaking consistently down beyond support levels as we hunt for different levels of support. Let's take a look at the SPY. Yeah, okay, we are getting a rotation back up now. In my opinion, this is because the Treasury yield is somewhat coming down. I don't know if that's continuing anymore right now. Yeah, it is. It's still down. So let's see here. Okay. Moving to the downside here, DWAC at 8% to the downside. Boy, oh boy. Look, yesterday at the market closing live stream, and this is just, in my opinion, just basic trading psychology. Basic trading psychology. In my opinion, it was a very big mistake to hold DWAC through the jobs report. And I mentioned this yesterday in the closing live stream because the psychology of it doesn't make sense. If we get even a slight miss, a risk asset like something that is a momentum play is going to get absolutely whacked. And so somebody who bought on hope yesterday that we would have momentum of this stock continuing to run, probably bought at $59, $60, and now it's trading for nearly 10% less, not quite, about 8% less, sitting about 55. The reason for that is very logical. It just takes a small miss, in this case, slightly higher inflation read, and so what happens? People sell off risk assets. It's basic psychology of money. Look, there's a reason. And I know a lot of folks are tired of hearing it, but there's a reason my program on the stock market, in which I also include all of my buy-sell alerts. So whatever trades I'm making, I send those out, so you know what's going on with my portfolio. There's a reason it's called the stocks and psychology of money, because a lot of, for example, even technical analysis is just basic psychology. It's where can you find the most generic TA that the vast majority of traders are using. And more often than not, I'd say 9 out of 10 times it works perfectly. It's really incredible. And the nice thing is there's still so many doubters, like the fundy people, which I consider myself a fundy person, fundamental analysis person. that really hate TA. But what you have to think about is stock investing isn't a matter of all fundamental analysis or all technical analysis or all momentum analysis. In fact, if you look at, for example, Zoom, and you consider Cathie Wood, somebody who's, in my opinion, has an incredible mindset and outlook on our world and innovative companies, really highly respected and regarded, lover. But one of the problems that you have is I don't think Cathie recognized that we had a triple threat on Zoom. And it's what I call a layering. This is another one of the other things we talk about in Stocks and Psychology of Money. But very briefly, I don't have my Apple Pencil. My pencil's gone. Someone stole my pencil. All right, fine. I guess I'll have to use the non-pencil here. But anyway, what you kind of have in the stock market is a layering, right? You have fundamental analysis is your base layer. Then you get technical analysis, which is your next layer. And then after that comes momentum. And all three of these things can contribute to the value of a stock. But when momentum goes away, which honestly sometimes can be much more euphoric and be substantially large, you fall back to TA. When TA breaks down, you fall back to just basic fundamental or more intrinsic value, in my opinion. This is because you can have traders that trade up a stock and actually create momentum. You saw a lot of that happen in the stock Upstart. But also, it's important to look at, again, somebody who, in my opinion, is more of a fundamental analysis, but isn't considering momentum or technical analysis. You look at Zoom, and the technicals were horrible. And this is obviously why we've been seeing these declines and these downtrends. But also, you've got to remember, folks, there's a very simple momentum trend in Zoom. People invested in Zoom as a safe haven stock during the pandemic. Pandemic either over or less severe. It's certainly too early to say it's over with the Omicron surges. So less severe, what happens? People rotate out of Zoom. They don't need that anymore. So your fundamental analysis isn't even affected because you were just way beyond the levels of fundamental analysis here. So anyway, important things to consider. There is a birthday coupon for that program, and all of the programs linked down below, including the Path to Building Your Wealth. That is a new course that comes out by my birthday. My birthday, this is going to be my 30th birthday, so it's special. So if you want to be part of that 30th birthday, there's that birthday code. Okay, so let's take another look here at what some riskier assets are doing, like Tesla in the tech sector. You have a slight recovery here, but you're still net down after the jobs news here. Jobs news right here. Looks like we lost about 7 points on Tesla, which honestly, 7 points on Tesla at about 1075. Hold on, 7 points. There we go. That works out to slightly less than slightly more than 0.5%. In terms of a movement there. You've got Robinhood also rotating down slightly, only up about 0.13 right now. Let's see, is Baba still moving? That's excellent if it is. It is, yeah. Baba actually rotated down, then picked up its movement again. Good job, Baba. Let's see, Etsy. Etsy rotating down slightly. Okay, I think we've got a pretty consistent picture here that the market's not loving what just happened. No, Shelly, no. I'm not in the 30 club. Not yet. Not in the 30 club. Let's see here. Yeah, Trade Desk, Plebes, and Ventura. Oh, that's awesome. I love Trade Desk. Oh yeah, Adam, no, you're absolutely right. So the layering can absolutely be applied to Hood. So one of the funny things about Hood is that when Robinhood first IPO'd and ran here, this was so clearly your momentum layer right here that I sold calls right here at about $72, and I took a 99.9% profit on those sold calls. Just, I don't know, like 8 weeks later, because it had just been trending straight down. So there are opportunities that even if you're in a stock where you could sell sell calls, which would against your position, which would be having covered calls, and actually capture a substantial hedge and free income essentially as the stock declines. Now, in my opinion, Robinhood has fallen to this level where it's actually well below the fundamental value position. It's been an easy stock to hedge or use as a hedge, but yeah, I mean, just solely looking at the company's cash position, crypto potential, it's remarkable that the company is as inexpensive as it is. But then again, the retail community does not necessarily love it. So it's an easy way for hedge funds to actually play the retail community. The retail community is always thinking, oh, go get the hedgies. You hate the hedgies or whatever. The hedgies love trying to predict what the retail community is doing. It's a great way to hedge. So Fed funds futures imply now a 90% chance of a rate hike at the March meeting after this payroll data. So it looks like Fed funds futures. Blau, this is net of their debt, actually. So if you look at their cash position, I want to say it's somewhere between 16 to 19 million. You subtract out their debt, they have somewhere around billion. They have somewhere around $7.5 to $8 billion of cash, and their market cap is like 13.8. So you're every bit you're putting into this stock, you're putting somewhere between 55 to 60% into just cash, into just book value. It really incredible. So 1992, the best year. There you go. That is right. 92. Heaven has the knowledge of an 80-year-old. I don't know if that's a compliment. Biden's almost 80. All right. Nvidia going down. We'll take a look at that. A lot of excitement for Nvidia longer term, specifically because of the metaverse plays and the excitement that we're getting out of CES. But we are getting more of a rotation down in individual stocks. Okay, let's see. Yeah, S&P is vacillating. A lot of this sort of vacillation here right now in the S&P 500. We do have about 32 minutes to go before the opening bell. So the interesting thing about these the earlier mornings is we get a lot more time when we have these early reports. CPI data, by the way, coming out on Wednesday. And then you do have the Federal Reserve also meeting at the end of the month. I believe it's the 24th and 25th. I can fact check that really quickly. That meeting is going to be, it's the 25th and 26th. But that meeting will be another catalyst for the market. So first catalyst, I think January 12th, CPI catalyst. We did have a reduction in inflation reads in Europe, in Germany, that is. You peaked out in November and had a rotation down in December for inflation. You also had that similar rotation down for inflation with a PMI report here for manufacturers in the United States, which is quite exciting. Right. Let's see here. Thank you. Compliment. Okay. Awesome. Good. All right. So let's do a little bit of seeing what the suits are saying to the drama that has unfolded this morning. Okay. Treasury yields just have not only did they peak and then rotate down, they have now rotated back to the upside. We are now at a new peak, folks. The 10-year Treasury now at just over 1.76. And I'm going to go ahead and keep this chart in my forefront here, so we have an idea of what's going on here with bonds. That's probably going to weigh okay. Yeah, and then we're now at 0.9 on the 2-year. So that, oh yeah, oh, nice spike on the 2-year. So that should hurt. Okay, we have futures retreat as payroll misses, average hourly earnings rise. As expected, the hourly earnings was the catalyst that we were looking for, and it is exactly what we got. Wasn't ideal. We have, let's take a look at what else we have here. What are the suits saying right now? So, Okay. The speculation now that Omicron is the reason for this weak jobs report. The report makes the 3.5% unemployment rate that the Fed policymakers are predicting by the end of the year entirely reachable. On a full year basis, employment climbed 6.4% last year, at a record as anticipated. More positive data, the long-term unemployed or those jobless for 27 weeks or more declined. Black unemployment actually rose from 6.5% to 7.1%. That's a quite odd inflection up. Yeah, inflection up on black unemployment and black women. So black women and overall black rate up. There's the thesis that this could potentially have to do with more exposure to sectors that could be affected by Omicron. So social distance sectors, service sectors, and so on. Okay. All right, so that's what the suits are identifying right now. Yes, Star, the data's been out for about 30 minutes now. We had, just a recap if you're just now joining, we had a miss on the top line unemployment read, but which was initially cheered by the market, but actually turned into bad news because when we calculated the average hourly earnings, rather than rotating up 0.3% as expected, or I'm sorry, 0.4% as expected, they actually rotated up 0.6%, which is an annualized inflation rate of about 7.2%. Not good. And so that has left yields rising, tech stocks selling off, S&P falling. Hospitals struggle to match Walmart pay as staff flees Omicron. That means nurses are going to Walmart because they're tired of Omicron in hospitals and the stress probably. Wow. Okay, that's an incredible headline. All right, let's take a little bit of a peek again at looks like some stabilization happening here at BTC. Let's look at the SPY and then see what other news we can find. Okay, so we had a little bit of pain. I think this is just going to imply that we're going to be more tentative until Wednesday when we get the CPI report, but otherwise not so dramatically terrible. All right, let's get to the overall futures read, and then we'll look at all negative, everything red now. So I'm going to change the title here. Jobs Day, market. There we go. Okay. It doesn't want to let me change it there. Fine, then I'll change it here. Oh, that's a mistake. There we go. Okay, let's see what news we have as we wait for the trading day to actually really begin in about 26 minutes. I think most of 2020 will be tentative. Yeah, I actually agree with you. I think 2022 wouldn't surprise me if it's heavily sideways and painful. That is risky for options contracts, so keep that in mind if you're in options. Get your puts ready. Nurses, someone here says nurses are quitting to go to the travel nurse route direction. because the pay increase is insane. Somebody else says hospital nurses are quitting because wages are too low. Yeah, and then becoming travel nurses to return to the same hospital for double the pay. Wow. Wow, that's interesting. Okay, so let's see here. Yeah, well, they're correctly identifying that futures are dropping on the spike in bond yields and wage prices. Okay. So this is about hospitals. Lowest since September and a drop of 40% from a record in Bitcoin. Wall Street is using tech firms like Zillow to eat up starter homes. Great. Makes it harder for families to get in. But that's capitalism. What we need is a government that can actually build more homes, but most of our governments are quite frankly incompetent. So investors brace for slowing corporate bond sales, less issuance. Eurozone inflation hits new record. That is the opposite of what was happening in Germany. Not good. Let's see what happened here. Consumer prices in the Eurozone increased at a record pace in the year through December as food prices jumped. All right, let's see here. Okay, the European Union Statistics Agency said consumer prices in December were 5% higher than a year earlier. This is a pickup from the previous record of 4.9%. That is not ideal for what we're looking for in the United States. Economists surveyed by the Wall Street Journal had expected the inflation rate to ease to 4.7%. But while energy prices rose at a slower pace in the 12 months through December, food price inflation actually jumped to 4.6% from 1.9% in November. The pickup in inflation as 2021 drew to a close was a surprise for many economists. Oh, look, folks, economists are surprised that inflation is higher than expected. All right. Oh, no. Inflation's higher. All right. Let's see what else we have here. Barron's hiring was weak, but still expect a rate hike in March. Yeah, no kidding. This shows you, this is actually a nice chart here on the jobs gains. Kind of shows you how uneven this has really been. Jobs report disappoints. Bitcoin falls to 3-month low. Barron's here. 7 things Bitcoin fans say and why they're wrong. Ooh. Let's see what we got here. Really? Really? I can't. Barron's Advisor subscription. I have a Barron subscription. What is this? Another $30 a month. Oh my gosh. Well, all right. Never mind then. You know, I think the big thing is that Bitcoin's an inflation hedge. I think we've really disproven that over the last few weeks in the latest pricing activity. It's been a lot more, again, tech related. It does look like S&P future is recovering a little bit, so that's good. A little bit of a move here on recovery stocks like Delta, Carnival, American Air. ARK Invest still down about 0.13% fractionally here. GameStop still making nice moves, as well as Emrin. Otherwise, pretty consistent here as we wait for the opening. Yeah, DWAC down as expected. Starbucks down about 2.6. Roblox, wow, folks. Roblox down at $87. Nancy Pelosi and her husband, they bought $100 call options for Roblox, I believe, for September of 2022. They were at the money, roughly at the money at the time when they were bought. A little upside down right now. Now, you are upside down. Matterport sitting at 1611. Cloudflare 103. Not a lot of moves in the middle, though. Middle seems pretty quiet right now. Tesla up about 0.4% in the pre-market. All right. Why young adults are delaying parenting. Jobs? Investing? Let's see. Most of us in our 20s and 30s are familiar with the rhymes of friend group life changes. First, people find their long-term relationships, and in each case, you hear, all you hear, dear, okay, blah, blah, blah. Okay, so where's next? Okay, wait, here's 22. But here's the thing about 2022. I have ushered friends through whatever. I don't know if this is going to tell us anything. Familiar and lasting issues. Okay, many say they plan to keep delaying parenthood over and over and over again until they manage to pay down student loan debt, buy a home, or otherwise attain some form of financial stability. See, you know, if folks were in the stocks and psychology of money course, they'd be able to have children sooner. Hashtag not guaranteed. Not a fertility course. Anyway, okay. I mean, that makes sense. Those are sort of the common arguments that we've seen for why we're seeing families delay having children or buy homes. All right, let's try the Financial Times. Let's see what's going on in Europe. We got 19 minutes to go. All right, so, oh, look at this here. Betting on transitory U.S. inflation is still valid. Okay, I don't know why that title doesn't really jive with me, but it's a little confusing. So, senior fellow at Harvard Kennedy School. Who cares? All right. Team Transitory was in retreat at the end of 2021. The rapidly accelerating inflation predicted by economists, including former Treasury Secretary Lawrence Summers and former IMF chief, whomever, had appeared. Consumer prices rose 6.8% to the year end in December. Fastest increase since 1982. By December 15th, even the Federal Reserve policymakers were worried. The minutes, yeah, they freaked out. Those minutes were just bad. Worst minutes we've ever seen. Now, this writer says, I would caution the people abandoning the transitory argument not to abandon their position so easily. After trillions of dollars spent on fiscal support, too much money may have been chasing too few goods by the end of last year. But this year, I think the situation will reverse, with growth and inflation slowing. According to the Brookings Institute fiscal impact tool, local, state, and federal tax and spending policy added an overall 7.5 percentage points to GDP in the first quarter of 2021. But the fiscal impulse turned negative thereafter and is expected to be a drag on the economy through the third quarter of 2023. And even if parts of the stalled $1.75 trillion Build Back Better stimulus are passed this year, actual government spending in 2022 would remain small, partially offset by ramped up tax collection. Interesting. Okay. While overall the stock of savings is astonishing, it is dwindling, and it was not distributed evenly in the first place. The personal savings rate had reverted to pre-pandemic levels of around 7%. According to the JPM Institute, low-income families saw the highest percentage gains in savings from fiscal measures, but exhausted their savings fast. For low earners, the proportion of any income increase was spent on consumption, and that is typically a higher occurrence than those who are wealthier. This is true. I mean, people who have more wealth, they dump their money into the stock market when they get, a PPP loan or a cheaper real estate loan or whatever, right? Lower income individuals, they get a stimulus check and it's let's go buy a Prada purse, which is, sometimes what comes first, the chicken or the egg, like bad impulsive decisions or low income and low savings. I don't know. But anyway, well, I think it all starts with the fact that our schools suck. I don't think it's people's fault. I think it's the government's fault. But anyway, the government people who have burned through their savings. Yeah. Moody's Analytics excess. Well, this is also why I believe I disappeared there for a second. Because individuals who who have gone through their stimulus and their opportunities to spend money might still want to spend money, and if they still want to spend money, then you essentially you have to borrow if you don't have that. So listen to this. Okay, somebody here says, I don't think poor people bought, quote, Prada purses, Kevin. You know, you'd actually be very surprised, because according to Prada themselves, Prada priced products specifically around the stimulus check amounts or slightly out of reach, because so many poor individuals were now receiving a lump sum of cash that would finally allow them to purchase a luxury good that they previously could not have, and spending skyrocketed on consumer goods around the $1,200 to $1,400 price range. So, you know, while the initial reaction that you had, I think, is fair, that why would a poor person spend money on a Prada purse with a stimulus check, I think in actuality, they did. And businesses took advantage of that. Businesses took advantage of the pricing power that gave them. And unfortunately, people blew their stimulus money. You know, I know some people might say things like, oh, you know, this is a bad take or whatever. It is what it is. That's just the way the market works. You could stick your head in the sand and pretend that individuals who get a stimulus check aren't tempted to buy crap they don't need. But the reality is we don't have financial education in American schools. You know, we've got 95% of American students learn chemistry when only 5% of Americans actually work with chemistry in their daily lives. And 100% of Americans need financial education, yet only 5% of Americans actually learn it. So you've got a very backwards government. You've got a backwards teaching. So yeah, you know, I mean, look, I don't understand what you're like, what you're going for here. Like, if your goal is just to try to like obviously, no, it wasn't only Prada purses, and making an argument that people who had more money were now incentivized to spend money, not care so much about sticker price, incentivize companies to raise prices to stimulus levels, or shift them around to stimulus levels, and take advantage of new pricing power that they had. This leads to consumer price inflation. This leads to more sales and record revenues for companies. Obviously, not every single human who got a stimulus check goes and buys Prada purses. I mean, no person with logic or an economic background thinks that there's only one thing that happens. Things happen in a gradient. So let's get off that and get back into the Financial Times here. So the upshot here, and I actually agree with this very next line here. Now, this is what I've believed for a very long period of time, and while I've been wrong about when we would see an inflection point in inflation, and I really think the Delta surge was part of that, because the Delta surge really set us back about 4 or 5 months, which we weren't expecting the Delta variant and the Taiwanese factory shutdowns and such. The fact of the matter is, at some point in 2021, we will get that, or we should, knock on wood, get that inflection down in inflation. We don't know when it's going to be. And that's what's frustrating for the stock market, is it's entirely possible that the CPI read that we get now for December could still be a big miss. It could still be high. It could be bad, just like what we saw at the European Central Bank, which is not ideal, but it could still happen. But at some point, we do expect that inflation will rotate down. And so anyway, we'll keep going here. Unemployed respondents to a survey by Indeed.com said their financial cushion was one of the top 3 reasons for not urgently seeking a job. That's actually interesting. As those savings run down, many who dropped out of the labor force will try to return, boosting labor supply and easing upward pressure on wages and therefore prices. What about business investment? Even limited Fed rate hikes will increase borrowing costs in 2022. 10-year Treasury yields are rising, and it's hard to argue the investment environment will improve in 2022. The dollar will strengthen, pushing down inflation and exports. This is also an interesting argument here, is that the more our Treasury yields rise, the more attractive our treasuries become to foreign nations. And we talked about this a little bit earlier, but that could actually keep a lid on Treasury yields, but could also hurt exports as the dollar goes up, and this is true. And then that could hurt companies like, potentially to some degree, Tesla, although we do manufacture products in China as well with Tesla. Apple potential exports. Anyway, foreign demand may also be weak. Chinese growth slowed precipitously as they're seeking financial stability. Beijing has signaled they will do more to support growth in 2022. This is probably the biggest qualm that I have with investing in China, is the potential for a slowdown in the Chinese consumer economy, which I think is bad news for both Alibaba and NIO, though Alibaba the last few days has been on a rotation to the upside. Let's see here. Okay, let's see. These may exacerbate existing global supply chain disruptions in early 2022, but there are other indicators that supply pressures are easing. Order backlogs and supply delivery timeframes have improved in recent months. According to the Fed's new index, supply chain issues have peaked and might start moderating somewhat forward. I was actually reading the New York Fed's blog about this. It's really interesting. They put together like 6 or 7 different charts into one, and think that there might be a peak in inflationary readings as they saw a tiny little inflection point to the downside. Fiscal drag, shrinking savings, and weak foreign demand are likely to ease an overheated economy. I couldn't agree more with this. And it's interesting how they're breaking this down. I think they're doing a great job here. But lack of government spending, shrinking savings, and lower foreign demand totally likely to reduce an overheating economy. This and improving supply chains will reduce inflationary pressures. Summers and others were right in 2021, but I see the balance tipping within 6 months. I'm signing up for another year as a member of Team Transitory. I think this was actually a really good piece. This was probably one of the best pieces that I've recently read. So this was a good one. Who is this person? Let's see here. Megan Grid is. Hey, we can follow her on Twitter. All right, we'll do it. I'm already following her. No, that was good. I think this was actually a great piece. All right. Let's go take a look and see what's happening here at L Stonks. So DWAC down 7.7% as we expected yesterday to decline. GameStop just moved 1% here in the pre-market, and this movement comes for a second. There we go. So on the NFT marketplace news, really exciting. Alibaba up about that 3.9% again, similar to yesterday. AMC sympathy GameStop here. So Trade Desk 2.4%. Let's go ahead and grab Tesla here. See how we're doing here. So let's see here. What do we have here? Tesla slightly rotating back up. Okay, Roku 1.46 to the downside. NIO, nice little move here right towards the open. We've got about 5 minutes to go towards the open of a nice 1.3% move to the upside here. Tesla now 0.83. It does look like the market's somewhat recovering in getting over this jobs report. All of them, all the indices still red. Yeah, and they are slightly delayed here. Let's go here. Let's look at futures here. See if these are any faster. So these are only about 2 minutes delayed, these futures here, but also still red. Oh, looks like tech just went flat. That's interesting. There we go. Yeah, roughly flat there. So tentative market again. We really expect this tentativeness to continue for a while. No, it's not really news, honestly, that that GameStop is getting into the metaverse or the NFT space. You know what it is, though, is you have GameStop and AMC investors that regularly are interested in catalysts for trading, so you can get these larger outsized moves in the stocks because of that. Great piece on inflation. Are you sure it isn't confirmation bias? It could be. It very well could be. However, and you know, I regularly look for reasons that I'm wrong, and I've definitely been delayed, but I still haven't found evidence that inflation definitely will not go to the downside. And I'll tell you, I look every freaking day for evidence that inflation will not go to the downside. So, you know, I'm very, very open to that. Aaron Ray just said, just pre-ordered your new course. That's the wealth course, the path to building a wealth for sure. That's sort of a hybrid of taking all of the knowledge from stocks and real estate and combining that and applying it to various different situations where I'll be breaking down 30 to 60 to maybe even more different life scenarios where people are with their financial situation, their wealth, and then recommending non-financial advice, of course, but you know, recommending a scenario as to what I would do in that situation, not necessarily what you should do, but what I would do in your shoes, especially if I had a personality like yours. So we have a Q&A in that course, kind of like, hey, what's your personality? What's your situation? I can't guarantee that I'm going to do every person's scenario who's signing up for the course. The course has been more popular than I expected it would be, but that particular course, it's pre-sale, so it comes out at the end of the month. When it comes out, the price is going to double. It's going to be an over $1,000 course when it's done. It'll be one of the more expensive courses. So the lower price course will still be the stocks and psychology of money one, but this one will be different. And when the content comes out by my birthday, end of January, so January 28th to 30th, right around there, that's when all the content will be up, which is really exciting. But yeah, on pre-sale, you don't get anything, unfortunately, but you got it 50% off basically, plus a coupon. So that's pretty cool. Tesla rising here as we head into the bell. Keep in mind, if you also want stocks and any of my buy sell notifications, you can see exactly what's going on in my portfolio. Check out the Stocks and Psychology of Money course link down below. You use that coupon code. Price goes up over time. You get lifetime access. So if you like hanging out here, you may as well be part of the community. You definitely get that extra course member live stream as well, which is a lot of people really enjoy. So, okay, we honestly, it looks like the market is slightly enthusiastic here, or some enthusiasm, I should say, is coming back. Yeah, look at that. We had that real sort of pain as soon as crypto had the delayed reaction to the jobs report. If you're just now joining, we had 45 seconds until the bell. The jobs report missed, which initially actually led both the S&P 500 and crypto to rise. But the average hourly earnings inflation rate came in at an annualized rate of 7.2%, which is substantially higher than we were expecting. We were expecting 4.8%, which is not good. The last thing we want are more inflation catalysts. So Bitcoin took about 5 minutes to react. S&P 500 only took about a minute to react. Delayed reaction there on Bitcoin, but Bitcoin did rotate down. We are seeing, though, a recovery in a lot of stocks. We have about 7 seconds to go. Even the S&P 500 recovering. Let's see how we do.
Has a sell one for it. Now, I've chided him in person about that, but he has a sell on it. I would rather have been in Ford during this period than Ribbon. Yeah.
I wonder at what point Jonas does a mea culpa on that underweight.
Yeah.
But we'll see.
He's so
He'll
nice.
be on again in a
He
few
is
weeks. I'm
really
sure.
nice.
There's the opening bell on the CNBC.
What is this, like 40% green, 60% red? That's boring. It does look like, though, that the S&P 500 is going going green here. We just moved slightly green. I don't know if this is going to last. Take a look at these openings here. Let's go look at Tesla. Tesla red candle sticking after rallying to about 1080, 1082. Red candle sticking down to about 1075 right now, wicking all the way down to 1069. GameStop is also wicking down, from about 24% to about 21%. AMC wicking up. Trade Desk running. Very nice move here on Trade Desk. Trade Desk all of a sudden at 79.89 did fall to a low of about 75, 76. Great advertising play here for 2022. Got 7 figures invested into Trade Desk, and I am excited about it. We have, let's see here, Trade Desk having a nice little run right now. Let's see what else here. So Roku down 6% the day after I sell it. Wow, the day after I sell it, down 6%. Yikes. Shift Technologies down to $2.90 now. Oh my gosh. Beachbody, $2.10. Hut 8 Mining rotating down some more. Bitcoin recovering, but slowing down a little bit. DWAC actually recovering, only down about 5% right now from that closing yesterday. MRIN pulling down as well a little bit. Let's see here. Tesla. Do we have Trade Desk news or what's happening here? Tesla now at 1067. Let me quickly see what we've got going on, if there's something going on at Trade Desk, if there's news here. Nancy must have exited her position in Roku. Well, she knows before everyone. Jeffries upgrades Trade Desk to buy. Highlights 5 reasons to be positive or excited about it. Yeah, that's awesome. So a little bit of an upgrade here on Trade Desk. Great pricing still, even though it's up about 5% right now. Okay. Roblox falling 4.3% here, folks. A little pain there. That's not so ideal. Etsy down 2.11%. Enphase at 149. Affirm sitting at about 80, relatively similar to the levels that we've seen over the last couple days. Autodesk, another potential Autodesk and Matterport, both potential metaverse plays, slightly to the downside here. Let's take a look at where the SPY's moving. SPY's moving red again there. We had a very brief minute of green, minute to 2 minutes of green. Looks like we're going to continue the red day on fears again of persistent inflation. Tesla is now down 0.75% on the day. Tesla was up as much as 1.4% in the pre-market. And GameStop is also rotating down. Trade Desk now rotating down. Embraer up about 2%. Here's a great potential play on eVTOLs for their SPAC. Robinhood moving up about 2% here, trying to get back to $16. Completely smashed through its previous floors. Let's see how Beyond Meat was running yesterday. Let's see how Beyond Meat's doing. Beyond Meat. Let's see here. Beyond Meat, only about a 0.3% today. It did have a very nice run yesterday, coming out of those lows at about $58. Okay. Etsy now down 3%. It's possible that Etsy is going to get have a little bit of a way down, unfortunately, because of the consumer discretionary sector having some potential chest pain going forward with individuals having lower savings rates. However, I still think there's an opportunity, a substantial opportunity to at least hold Etsy through earnings. I think earnings are going to be phenomenal for Etsy. Remember, folks, the earnings that we're going to see, the Q1 earnings season, which earnings season should start soon, I think is going to be really, really incredible. We're going to see some phenomenal numbers from companies for the end of 2021. Keep in mind, we still have stimulus coming. That child tax credit is pretty big. Okay, let's look at the calendar here. So not much this week. Let's take a look at next week. Oh, here we go. Okay, so it looks like on the 17th, folks, that's really when we get big earnings. Big earnings started. Oh, wait, we also on Friday the 14th. Oh, wow. Friday the 14th, we get JP Morgan, BlackRock, Wells Fargo, Citi, First Republic Bank. So the banks report next Friday. That's a week from today. Then we get more banks on the 18th. Bank of America, Morgan Stanley. We get Johnson Johnson, Verizon, GE the week thereafter. That's when the Fed talks. Yeah, so earnings week starts about a week from today. And I think things are going to be very excited here. I have no idea when Lucid's going to announce their delivery numbers, but I expect they're going to be terrible. In addition to that, DWAC is getting whacked. Not a surprise. Not a surprise that DWAC is getting whacked because we thought it would yesterday, given the technicals and of course the risk of the jobs report. BTC rotating back down. That enthusiasm that went into the opening has already waned. Again, as the market is digesting higher inflationary reads for average hourly earnings, leading again to more continued opportunities to build your portfolio. So it does look like some fintechs are running today. Not only do we have Robinhood moving up today, but SoFi moving back over $14 today. Neo's up about 1%. Palantir, never thought I'd see the day of it being under 17 again. But and I'm not in Palantir. I might be like fractionally from M1 Finance, but otherwise no substantial position in Palantir right now. Although I do really like Palantir. I think Palantir is going to be an incredible stock over the next 10 years. But through these inflationary concerns, it's not going to do well. Let's go ahead and look at Kathy's ARC. And what we're going to do here is we're going to look at her Palantir position really quick. Also worth noting that Kathy Wood has really moved down her position.
Sorry, could you say that again?
No, please don't do that again, Siri. Kathy Wood has really reduced her position in Tesla. Kathy Wood used to have a position of almost 8% of weight in Tesla, and it's really been reduced here. In fact, I think we can look at the history. I just have to log in, or what do I have to do? Oh, okay, here we go. Kathy's ARC weight in portfolio. There we go. Yeah, look at that weight in portfolio here, around 8% in 2020, sometimes going as high as 8.5%, and really getting sliced towards the end of 2020, sitting around 7%, and then more recently again getting sliced. For some reason, Kathy Wood slices Tesla in December, right before record deliveries. All right. I'm going to quickly take a look here to see if we have news on Lucid or any idea when we're going to get those car deliveries. Nope. Nope. No news. All right. So no news on LCID. Let's see. What else here? All right. So what's moving? Well, GameStop actually now has stopped falling. We saw it up 24. Yeah, look at that. It's rotating up. Okay, here we go. Here we go. We saw this happen yesterday as well, folks. The very first, probably about 20 minutes of the market, we saw some red, and then we hit a recovery point. We had this really weird V-shaped pain yesterday, and we're getting that very similar thing happening right now, folks. I don't know if it'll hold like yesterday, but I'm going to bring you to yesterday's chart, folks. Look at yesterday's chart. We fell from 645 to 713. Folks, it's 640 right now. We don't necessarily have to align perfectly with what happened yesterday, but we are essentially doing the same kind of recovery here a little bit earlier. This is kind of good. Yeah, AMC hitting a new level here. We are, let's see, is Ethereum, crypto's trying to claw their way back after that jobs report, still suffering after that jobs report. Even Roku now recovering after that pain, Roblox recovering after that pain. So that could be, there could still be a potential opportunity to do a little bit of shopping in the event that that things do continue rotating up like this. You know, we do get a lot of opportunities to buy, so there's really little reason to be impatient. But I do like taking advantage of some of these opportunities when we get them, when we see these nice rotations and we come out of day lows. Yesterday I did a lot of shopping, opened up a lot of new positions in some really great options. Options much more risky right now in this market, but I've got a lot of conviction. Yeah, sometimes conviction can be confused for overconfidence, though. So you have to be careful that you don't wager too much of your portfolio. Look at Lemonade, folks. Lemonade up 7.5%. Lemonade, this is now bouncing off of the lowest levels that we have seen for Lemonade. Lemonade down to $34.26, the lowest level we have ever seen for Lemonade, and finally rotating. Now, keep in mind, high short interest at Lemonade, very, very high short interest at Lemonade. It could be possible that the market's saying, hey, folks, we have at least 2 trading days, actually 3 trading days, Friday, Monday, and Tuesday, before we have to worry about the next catalyst. The next catalyst is going to be what's it called? CPI read on Wednesday. So is it possible that we are going to have a run in some stocks between now and Tuesday when we start getting nervous for that CPI data again? AMC up now 6%. Oh, wow. Trade Desk, very nice here. Trade Desk, Aurora Cannabis up 5%. Not in the cannabis space right now. Going for advertising, folks. Advertising. 2022, in my opinion, is the year of, oh my gosh, we got to advertise more to get more customers, and the year of buy now, pay later, which a lot of you have been asking me, Kevin, why don't you have buy now, pay later for the courses? And the answer is I do. You just have to check out with PayPal, and you could use their buy now, pay later option. So check that out with PayPal when you go to the courses link down below and use that coupon code. The coupon codes, anytime they change, just means the price went up. So keep that in mind. Okay, so Trade Desk, really good movement today. We have Robinhood, 4%. Let's go. Very, very good movement. Let's look at Affirm here briefly. Affirm also coming out. Okay, folks, we're getting a push here. This could be another. You don't want to get overly excited here. This could be another dead cat bounce. We have seen endless convictionless rallies here. Yes, Frank, still holding hood calls. In fact, I doubled down. Doubled down yesterday on hood calls, which I'm very happy about right now. But keep this in mind. Be careful about getting too euphoric, because we have continued to see these convictionless rallies where we get these all of a sudden brief rally moments and then they pull back down. I have no opportunity, unfortunately, to use Affirm. You have Teachable would have to have a merchant partnership with them, which they do not yet. I would love to have Affirm for the courses, but I do not. However, you could use the Affirm debit card and use buy now, pay later on whatever the heck you want. It's kind of cool. AMC rallying here, folks, 7.44%, along with Lemonade up 7.6%. GameStop struggling a little bit to keep going. Nvidia moving. Sunrun, the beaten down solar stocks, folks, are finally moving a little bit here. We have, let's see here, Robinhood up 5%. Where's Tesla? Is Tesla getting left behind again? You know, I thought George Bush left past the No Child Left Behind Act here. No, actually, Tesla's moving pretty decently. So Tesla now up 0.9%. So that pain was short-lived. I'm briefly going to do a little hunt here on I want to see what vol looks like for options. Uno momento, por favor. Let's go look at some volatility for options here. What we're going to do, HVG. Let's see what we got, folks. Options volatility. We are at actually decent for trade desk. Let me look at some other ones here. Tesla's at highs right now. So probably sell puts be a little bit more desirable. If you're confused, by the way, what I'm looking at or what I'm talking about with buy high or buy low, sell high when it comes to volatility, folks, these are things we explain in the Stocks and Psychology Money Group. Affirm at a low right now. Robinhood at a midpoint. And let's do Etsy. This is another one that I've been looking for as well. Etsy at a midpoint. Let's go back to the sticks here for a moment. And hold on a sec. I also want to see this quickly on the jobs report because this is such a big deal today.
Prices, but we also know that the virus is still a concern, and in the data reported today, we continue to see those workers who are not looking for work out of fear of the virus.
Yeah,
we're looking forward to the day where that's less of a reason not to go back to work. Chair Rouse, a snowy White House this morning. It's good to see you. Thanks so much.
You're very welcome. Thank you.
As we go to break, take a look at the bond report today. 10-year coming off the early morning highs of 177 or so, just above 175, as the jobs number does disappoint at 199K. Squawk on the Street continues after a short break.
Okay, let's continue on trying to understand what's happening here. Emrin's got the run, folks. It's not GameStop. If you're day trading, it is Emrin today that has done the takeoff here. This is absolutely incredible. Emrin on that Amazon news, moving from about 24% in the pre-market to about 31% right now. A little bit of a pullback here on that excitement. Look at that pullback here. Lemonade chillaxing a little bit. Relaxing. This is what I'm talking about with these convictionless rallies. They can be very frustrating. S&P 500 is green at 0.09% right now. Let's go CNBC here. CNBC is NASDAQ. The technology is actually showing the best performance right now. But Tesla also pulling back. This is what I'm talking about. You just can't get overly excited about this market. As soon as you get a run, boom, you get this U-turn. You just get slapped with it. Now we'll see. This could just be a day's fluctuation here. But Roku back down to about 4%. ADA sitting at $1.23. Look at that bounce off of 120 over here. It's not, barely a bounce, but anyway. We've got Etsy sitting at 194, also kind of trying to rotate down a little bit again. Nvidia, let's take a peek at Nvidia sitting at down about 0.1%. Okay, so some of that excitement just relaxed a little bit. Trade desk was as high as 6%. It's holding on to about 5.59. A little bit of a pause here. Let me see what treasury yields are doing. Let's do that together here. Let's go to bonds. We're at 1.76 on the 10. And I don't know that we can get the 2 very easily on CNBC. I might have to look elsewhere. Nope, we got it. Okay, just slightly below 0.9 again. So let's see. Okay, let's look. I'm going to take a brief look to see what else the suits are saying about our money today. Remember, Wednesday is CPI day. That's our next catalyst, followed by the 25th and 26th when the Federal Reserve talks. Jobs report lifts banks over tech on rate view. Yep. VIX curve shows dire scenario already priced in. Ooh, how interesting is this? Hold on a second here. This sounds juicy. This sounds almost as juicy as a coupon code for building your wealth. Anyway, okay. As the S&P 500 heads for the worst start to a year since 2016, volatility markets are failing to sound fresh alarms, perhaps because they had already prepared for this type of turmoil. Ooh, plenty of anxiety, raging Omicron, China, whatever. Dire scenario already seems to be priced into the options markets. That's that possibility reflecting some tail risks that are present in the market. A rally in economically sensitive energy producers and financial companies mitigated this week's rut as tech shares have been sold off. They're seeing it's a safe haven. Okay, blah, blah, blah. Okay, that was a little boring. Okay, I get it. Potentially pricing in pain. Good. Okay, hospital workers quit in droves. We saw this. And treasure. Okay. Yeah, no dramatic particular news here. Let's go back to see if the rally's continuing. Yep. Okay. Yeah, look at this, folks. Trade desk continues the rally. Very nice. Trade desk, take a look at where it's trading, folks. So Trade Desk is at $81 right now, which is not a particular low for the company. You know, we've been much lower. We've been as low as $48 for the company, and this was back in May. Now, I think this was also before we had a little bit of enthusiasm for a 2022 movement on advertising. But a nice 6% rally here right now on Trade Desk. So Lemonade up 7%. Okay. DWAC now down 9%. Starbucks actually rotating down along with Rivian. A lot of things, in my opinion, are going green here. There's not that much deep red. See, Affirm went green. Google went green. Let's see here. Some of the other faves. Tesla's up 1%, folks. That's great. After the drama of the jobs report this morning, this is not bad. The market, honestly, this could be a sign that the market's saying, "Yo, we're good. We have sold off enough. We are low enough." Now, yeah, we have to be careful though. We did think that we were low enough when we had floor prices set for 10 to 20 different companies, and about 80% of those floors got breached. Not great, obviously. AMC rotating down, only up about 3.5% right now. Was as high as 7% intraday. Trying to grab Robinhood here just to see the intraday here at 3.78% to the upside. Is slowly starting to turn red intraday with a little rotation down here. Again, that rotation over at Trade Desk also some red. Really having trouble pushing past for some reason this 81 to 80 level. Some form of resistance seems to be here. OGI all of a sudden trade moving here. MRIN continuing to push. It's got to be some of the largest volume we've seen in a while. Oh yeah. Consider this though. The last time we had large volume like this, we just quickly rotated back down on MRIN. So this, by the way, is it is a momentum stock. This is a company that, just like Backed Holdings, just like Rivian at the high prices, just like DWAC at the high prices, I made a video about MRIN. And in my video about MRIN, I recommended caution that this was a momentum stock, that it wasn't worth it. So literally, Backed, MRIN, Rivian, DWAC, all of these I made videos about while they were in their peak momentum phases. suggesting substantial caution. And literally all of them have the same pattern, folks. Look at that. Emeren right here. Backed. Same freaking pattern. It's over and over and over again the same thing. Now, that doesn't mean we're always perfect. Definitely not. But you've in this market, you got to be so careful of those momentum plays. You got to get in and you got to get out. The worst thing that you could do on a momentum play is hodl options. I kid you not, but there are people losing a lot of money on companies like Sundial because they're diamond handing options, hoping for some of this momentum to come back. And even if you briefly have these little runs, look what continues to happen. You get these little peaks, these little runs, and then the collapses shortly thereafter. So you got to be quite careful here. Oh, wow. Cathie Wood's actually having a positive day here. Not only is NEO up 3.3%, which has nothing to do with Cathie Wood, but Cathie Wood is her stock, RK, is up 3.39%. And even Marquita is up 3.9% today, and Matterport up 2.9%. Now, what I'm going to do right now is I'm going to look at the inflows and outflows for ARK-K. Let's take a look and see what's going on at ARK for flows. So ARK-K flows, and I want to see what individual investors have been up to, if they are maybe not necessarily individual investors, but are just investors in general. Have they been putting money into Cathie's fund? And the answer is yesterday, when we were at all-time lows, folks. Guess what? $94 million of inflows to Cathie Wood's fund. This follows $200 million of outflows on the 4th, 137 million outflows on the 5th, inflows of only 48 million on the 3rd, and outflows of 113 million on the 31st. The last 7 trading days or 5 trading days, whatever here, have not been excellent for Cathie in terms of flows. But we are seeing inflows yesterday, which that's actually optimistic. I've been seeing a lot of outflows on red days for Cathie's fund, but in my opinion, we start seeing inflows on big red days, potentially that's a sign of optimism that maybe, just maybe, we're starting to hit some bottoms on these particular funds that have been so substantially oversold. So we'll see. Okay, so what else do we have here? So let's see here. Okay, so Shift Technology, nice run here, 6.69% here. Lemonade, folks, up 11%. Beyond Meat up 8%. We are getting a rally in some of the smaller caps, folks. Hold on here. Is this the beginning of a potential rotation, or is it just going to be another dead cat bounce? Let's take a quick look. Let's see what the indices are doing first. S&P 500 up. The banks like JP Morgan only up about 0.25%. Tesla up 1%, 1.1% here. Look at Lemonade, though. Holy smokes, folks. Is this going to be the beginning of a short squeeze here? Lemonade short interest very, very high. This is a big movement here for Lemonade at 11.8%. Yeah, we can definitely pull up short interest. Just a moment here. Trade Desk now 6.45%. Robinhood up 5.71%. Cloudflare's coming up today, along with SoFi 4.5%. Neo 3.36%. Palantir 2 and a bit. Matterport 2 and a bit. Where's Enphase? Enphase 1.36%. Nominal. Affirm about 1% right there with Tesla. But this movement here on Lemonade is very exciting. This is a full-on 12% move on a stock that is essentially at all-time lows here. It is a profitless company with no particular path to profitability, which has made... What's up, Jeff Weibo? Shout out to Jeff Weibo. Dude, I loved your income video. That 1337 was mind-blowing. That's my favorite number. It's 1337's right. Well, you can't see it. I don't know if you can see it better now. There you go. No, you still can't see it. But that little sign right there, That's no, I mean that's whatever. Okay, anyway. So yeah, let's look up short interest. Okay, let me get this up. Hold on a second here. So apps. Let's see what we got. Okay, Black App, Run. I do believe that Lemonade is much more shorted than Hippo, yes. But we can find out right now. Here we go. Lemonade is, folks, Lemonade is at a short interest percentage of 38.27% of float. It's insane. It's so high. It's so high. Let's get Hippo. Hippo is only 2% short. Robinhood's like 3 times as short as Hippo at about 8% on Robinhood. Let's look at Corsair. Here's another one, 31% short. Tattooed Chef, 33% short. Shift Technologies is 28.9% short. GME and AMC here, 13.39 on GME, and AMC sitting at 18.51. Folks, Lemonade is your squeeze candidate here. You are you're at a substantial level of short interest. The problem though with Lemonade is again, it is one of the easiest stocks to short for the hedgies because it has been so profitable to short. It is one of the easiest stocks to say it is potentially trading with a high valuation, that there's no profitability, that there's little competitive advantage, blah, 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 blah. I personally have an affinity for Lemonade. I don't invest in Lemonade anymore, but yeah, I mean, I'm out to 2025 and I'm having trouble even getting close to a potential path to profitability. So, yeah, it's not ideal. Okay, so let's see here. Okay, indices. Let's take a look at the indices here. We are at Dow Jones Industrial down 0.02%. S&P positive here, 0.12. But look at the winner today, folks. Actually, the two winners. It's the Russ and the Nas. The Russ is moving, in my opinion, because of the small cap short rotation. And the NASDAQ up 0.38% for NASDAQ Tech here. Let's go take a look here at Bloomberg Headlines. I don't know that we have anything particularly new at the moment. Not necessarily anything new. If we do go to, look at that. We're now at 12%, folks, for Lemonade. We are approaching that $40 resistance line. And I'm not sure if we're going to be able to breach this line here. We're at 12.5 right now, continuing to move on Lemonade. Trade Desk, 4.5%. Toast moving up. Beyond Meat moving up. Robinhood stopped moving there for a moment. Tattooed Chef now 3%. Lucid up 3%. AMC 2.8. Enphase only 0.65. Tesla moved down a little bit, 0.5%, 1/3% on a firm. Downside, waiting to see what happens with Lemonade. Downside risks still continuing over at Roblox, Roku, DWAC. These folks rotating to the downside. Build Bear, Starbucks, and then some of the recoveries, which have actually done decently over the last few days. Nvidia down. Not much. Woo! Time for more coffee. Got to get that Ben Mala coffee, folks. He doesn't sell coffee that I'm aware of, but he's got a coffee mug. Look at that. Look at that. You know what, folks? I never thought it. But I understand the pun now. I get it. Watch this. You ready for this? Look at that mug. It's a knee slapper. Oh my gosh. All right. So Lemonade holding on to that 12% there. But we'll see how this continues to develop here. Teladoc 4.8%. I do wonder what Teladoc's short interest is. Oopsies. I don't know what to do. I don't know what to do. Whatever. Hold on. wanted to get the short interest there. Oh yeah. Somebody wants me to do, where is it? Here it is. Kevin should do a stand-up comedy tour. When I was a kid, everyone always laughed at me when I said I wanted to be a comedian. Now, no one's laughing. Yeah. Okay, let's get the short interest. I love that one. Shout out to Mikey. All right, let's get this. Let's see here. T-Doc. Okay, here we go. There it is. There's the window I was looking for. T-Doc. Okay, T-Doc 16.07% short. Steve says, I want my money back. Oh, man. All right. Lemonade did it. Lemonade did it. Oh, it did it. It did it. Oh, my gosh. That is very bullish. Oh, my gosh. That's great. Oh man, comments are hilarious. So good run here though on the small cap high short momentums. Yeah, trade desk pulling back a little bit creates another opportunity to go buy it. Don't have to rush. See, that's the thing about this market, folks. You don't have to rush in when it's running because they usually come back down. The only one that's not coming back down is Lemonade right now, at least tentatively. Somebody wants to know if Biden is speaking at 10:15. 10:45. Biden to deliver remarks on the jobs report. It is currently scheduled for 10:45. Just leave it to me to tell you that Biden's probably not going to be speaking until at least 8 or 8:15 because he's always late. But anyway. Whew! Lemonade, 14% now, folks. Let's go. All right. Now, with that said, if you have not yet at least clicked on the link down below to see what you're missing out on in the Stocks and Psychology of Money group, or the course that's going to double in price in about 4 weeks because it's on pre-sale right now. It doesn't have any content yet. The Path to Building Your Wealth. Check out those programs linked down below. Stocks and Psychology of Money will get you immediate access to the course member live streams and my buy-sell alerts when I buy or sell, which I've been doing both buying and selling here over the past few weeks. A lot of. And especially options plays. A lot of good option plays. Those option plays from yesterday are absolutely killing it today. Hopefully the fact that I put $2 million in options yesterday, it helps reiterate. Well, maybe that doesn't mean anything at all, but hopefully we've hit the bottom on where we've placed some of these option trades. Are getting rejected. We could not get a full candlestick over 40.1 on Lemonade. We're getting rejected on Lemonade. But anyway, do check that out. There's a birthday coupon code down below. My birthday is this month. I will no longer be in my 20s. I feel quite weird about that. Now I'm getting chest pain. But anyway, 12.48% here on Lemonade. Still doing well, but look, could not get a solid candle break above that 40.10, folks. Getting rejected on Lemonade. People taking their profits on that Lemonade trade. Not sure if we're going to be able to swing above that. Keeping an eye on it. Roblox continuing to suffer here, now down to 85. I would love to pick up Roblox as a metaverse play, but honestly, I'd have to be seeing it in the high 60s to be excited for Roblox. Affirm has rotated down. It's down about 1% right now. Enphase down about 0.5%. So not all things going full green here, full steam ahead. Very, very tentative market. S&P again rotating negative. Tesla has been up 1%, down 1%, up 1%, up 1.5%, down 1%. Uncertain what Tesla is up to for the day. It does look like some of the smaller caps are really more of the movers, but we're getting more red now coming to the market. So I haven't done any buying or selling this morning, but I might, if this burn now continues that we're rotating to with the NASDAQ now going red, there might be some opportunities to go do some shopping. And of course, I'll send those alerts in Stocks and Psychology of Money. All right, folks, thanks so much for being here. We will see you in the next one. Have a great day. Goodbye.